So which team won the first practice round? This will be a brief little intro, I guess, to my spreadsheet that I use and maybe my reasoning, and then ultimately will indicate which team is the winner. Said team is exempt from or not required to complete this week's assignment, and in fact will receive an A in place of doing this week's assignment. So let's take a look. First, so you know, I get a decent amount of the data. I get all the data, from reports that come right from our CAP sim. Okay, and to start with, at the top of mine, this one here is the select financial statistics, okay, which I get from here. Okay, I just copy and paste that into my spreadsheet, and then I get a few items from the stock market summary, okay, which I again copy and paste right into here. There's a lot more noise in this than what actually gets used, and I'll kind of get to that. I want to go back. It's going to make me log in again. I'm sorry for that, but there's one other report, and I think you guys may have access to that. We'll see. Maybe I can't see, but the selected statistics for practice round 1, and I think you guys may have access to this. I'm not sure that it shows up in the same fashion that it does here, but it's a lot of statistics. I don't typically spend much time looking at it because the Capstone Courier would provide me virtually all the same information in what is, in my opinion, a little more usable form, but this is a good one for me to get statistics from to put into my spreadsheet, and so that's all the statistics down here. Now that said, again, there's only a few things that I actually take out of this in order to come up with my score sheet and who's going to win or who did win. Okay, and so I got to scroll all the way down, and see on the left side over here is a lot of stuff where I import some stuff and make some formulas and whatnot that allows me to then put this data in. So the first thing that I score on is earnings per share. Okay, again, earnings per share, as I expressed in the other video, is something that would not be relevant except in this case because we can compare apples to apples here, because you all started with the same number of shares, same income and whatnot, same assets going in, and so only because of that can we compare that. That said, earnings per share as an investor is hugely important to me. When I look at it in the real world, I often compare earnings per share from this year current to compare it to last year, the year before, and I want to see a growth in that earnings per share. In your guys' case, I can compare you one to another. Now, as with ROE, and I talked about that in the other, there's two components to earnings per share, right? There's earnings and there's shares. Okay, so the higher the earnings go, the better the earnings per share. Conversely, the lower the shares would go, the better the earnings per share. In the real world, we're seeing that with companies. They're called share buybacks. Last year, if you went overall, I think in 2015, if you looked at overall, the total share buybacks by companies was close to $1 trillion. Okay, a lot of money. Well, they buy back shares, they pull shares off the market. It should increase their earnings per share. And it gives money back to investors, right? It's returning money to the original investor. So in this case, Andrews had the best earnings per share, and Team Erie looks like had the second best earnings per share. And I kind of dropped 10%, from first place to second place. I think I do that consistently throughout the scoring. ROE, again, I want to know how well you're doing with my money. Equity is mine as an investor. Okay, and so I want to know how well you're doing with my money, and so ROE becomes very important. ROE, again, net income divided by equity. So again, two components. Net income, we always want to increase that, but I can improve my ROE also by decreasing my equity. Don't forget the two sides to these equations. Okay, and again, Andrews was the best, Erie the next best. Okay, then contribution margin, and I score this and I give this credit just because it becomes such a big factor. Okay, I just noticed that the first year or two that I used this game, and before I probably developed this scoring system, I just noticed that contribution margin was such a huge factor that I decided to give it some importance in terms of my scoring. Again, Andrews came out on top. Okay, then stock price. SP stands for stock price, and this is change in stock price. Okay, and I do dollar change. I've given thought at times to actually taking a look and doing a percentage change. Might make more sense. And by the way, feel free to come up with good suggestions or ideas for changing this. And I've had some in the past, and there's some I might incorporate. And maybe I'll talk about that. But stock price change. Erie had the best stock price change. Digby second best. Baldwin, and then Andrews. So profits, again, kind of important. You can see I only give it a maximum of 10 points. Contribution margin, stock price, profits, 10 points. Okay, big deal. Okay, you know, I'm interested as a shareholder in how my stock price has improved, but you know, if you're returning money as a dividend and doing some other things, that may not be the most important thing. Certainly, just keep earning money is, I think, more important than the actual profits, earnings per share, and ROE. But Andrews had a 10, Erie 9, Digby 8, etc. Cash flow, I don't give a lot of. It's only worth 5 points, and the reason it's worth 5 points, it's kind of a reward for managing cash. But cash, you know, as you can see, you can borrow a lot of money, for example, and have a nice cash flow. And I think that's what Digby did, right? So they ended up winning the cash flow. It's good cash management, though. They very good plus, right, on their cash. Baldwin second place, Erie third place. So just kind of a little bonus because good cash management, I think, is important. Strategy is purely subjective on my part. You guys have all given me your strategy, okay? And I'll tend to observe that, and I want to make sure that you're kind of following your strategy. Kind of tough in the first round or two for me to really say, you know, how close or badly you're following your strategy. I typically don't discount for strategy. It's not to say that I haven't, not to say that I won't. That said, I should add that you can change your strategy. If, for example, by about the third round you see that maybe there's an opportunity to change strategy, that you might be able to make more money, okay, and you want to change it, that's fine. Send me an email, though. Let me know that you've changed your strategy. Otherwise, I might discount you because obviously you might make a radical change that wouldn't fit what your strategy was. So, what do we have here? Well, first we have a total, a subtotal. Okay, and in that subtotal, Andrews is ahead 95 to Erie's 91.5. But, always got to be a but. I discount for emergency loans. Okay, so any team that had an emergency loan, and actually it's just any team that had an emergency loan that exceeded $5 million. Okay, Chester had an emergency loan also, but theirs was minimal. Okay, this is one of those areas I've thought about changing and maybe doing a little pro rata. Okay, where, you know, from 0 to 5 million, or 0 to 3 million is nothing. 0, you know, 3 to 6 million. Okay. Had I done that, I'm guessing that the discount for Andrews still would have been as high, you know, close to a $15 million emergency loan. That's pretty sizable, okay? Leverage, nobody had a discount for leverage. And I'll say this about leverage. I, as an investor and as somebody who's been in business and in the banking world and whatnot, leverage can be a wonderful tool. Absolutely wonderful tool. There's some things that I would do in this game if I were playing it that would involve far exceeding my limit for leverage, okay? Because I know what's going to happen in the game and things like that. Okay, there's some things that I would absolutely do without question that would cause my team to be discounted for leverage probably for the first 3 to 5 rounds. Okay, that said, it's also risky. Okay, and so this is a discount for risk. and that's why I put that in there. If you want to take that risk, great. Understand that you may pay a little penalty for that risk. And that's kind of the same with working capital. Working capital, the minimum, every team got a working capital discount except Digby. Remember, they borrowed money, so they got kind of a double plus. They got a little bonus here for cash flow. They didn't get a deduction for working capital, but every other team did. My working capital threshold is $20 million. Again, I think that teams, and I hope you guys remember the definition or the equation for working capital is current assets minus current liabilities. Okay. Again, it's a risk thing. Okay. You should have a certain amount of working capital. I think that's really important. 20 million. If you don't do that, you're taking on a little bit of risk, and so you'll be penalized. Every team was, not unusual for the first round or so. Okay. Again, Digby did some things. They borrowed some money long term, right? So you borrow money long term, it has a positive impact on your working capital in that case. So we had some deductions. So we ended up with a really tight race, but Team Erie came out on top barely over Team Andrews, and Team Andrews had higher profits and whatnot, but that emergency loan, I couldn't let that slide. In a scoring system, I'm sorry, I just couldn't let an emergency loan slide, and so that's why we have the deduction there. Basically, that's the reason Erie jumped ahead of Andrews, and so Team Erie, congratulations, and Team Erie then doesn't have to complete the assignment. They'll receive an A for that. I think Team Erie is Mary and Michael, if I'm not mistaken. Yep, Mary and Michael. So congratulations. The M&M team, I guess. You guys have won, so congratulations.